be a very interesting budget, and maybe he's going to have a lot. But especially from the taxation point of view, I think it was not something which we were expecting. It was absolutely a flat budget. But people still said that yes, it's not a bad budget, because FM has been very famous for bringing out some very new and exciting things, which at times become very damaging. So we did not see anything which was drastically damaging. So therefore, I would say it was not a bad budget, but there was nothing much as far as the taxes are concerned. Certainly, very interestingly in this budget, what he said was that from the direct tax point of view, he will be able to bring out or maybe to generate 13,000 crores exactly, nothing more than that. From indirect tax, it was around 4,800 crores. So overall, he was not expecting a great thing from the tax side. Overall revenue, which he was additional revenue, I should say, was 17,000. Whereas he talked about that as far as the collections are concerned, he thought maybe there is going to be a growth of around 18%. So he was expecting a growth of 18% with additional revenues of 17,000 crores. Somehow he was able to meet out 5.2 or 5.2% of as far as fiscal, the deficit is concerned, and now he's also committed to deliver 4.8. These are the very broad economic thoughts I thought just to share with you. From the tax side, if you will see from direct tax side, interestingly, there was a debate that is he going to charge the tax on super rich, and we were debating initially that what is the definition of super rich. Finally, he came to this conclusion that someone who is drawing more than 1 crore of rupees is considered to be a super rich. And according to his own statement, I think 43,000 people in India. And according to me, if you go to South Delhi and visit any colony, this number would be more than what he's talking about at all India level. So there was an expectation that maybe he will expand the base, but instead of doing anything in terms of expanding the base, just targeted these people by introducing this surcharge. Anyone who's drawing more than 1 crore, 10% surcharge. Effectively now the rate would be around 34 or 35% for someone who's drawing more than 1 crore. Same thing he did for the companies, that if your income is between 1 crore to 10 crores, additional levy of 5%, and anything more than 10 crore, there would be additional levy of 10%. In terms of individual, as it was expected, one thing which is good that, yes, we were thinking that maybe since it is the last budget of the government, maybe he will give a lot of benefits. We did not see anything very great. Only thing what he did was that if you are drawing income up to 5 lakhs, there would be a deduction of 2 lakhs of rupees out of your income. So in a way, if any resident whose total income is up to 5 lakhs, he would be eligible for a rebate of, for a 100% rebate or rupees 2,000, whichever is lower. So I think that's something which was expected, that he will give some relief. We did not make any changes in the slabs. Everything remained as it is, and this only relief which was granted. In terms of houses, yes, there was expected that maybe in order to really give a boost to this particular sector, we were expecting something which came in a very minute. If you will see that, it was very highly projected in media, but I don't think that large number of people would really be able to get this benefit. Where he said that you would be entitled to get an additional benefit. There is a new section was introduced that you will get an additional deduction of rupees 1 lakh from your income, provided you buy a new residential house, and there are conditions attached to that, that you should take in a loan from the financial institutions during this financial year 13 to 14. The amount of loan sanctioned for acquisition does not exceed 25 lakhs, the property should not be more than 40 lakhs, and you should not own any house. If you cover all these conditions, you would be entitled to get a deduction of additional 1 lakh. So I am not sure to what extent and how many people would take this benefit, but I think that's the only benefit for certainly very low people, those who don't own any house. It was a welcome step. And then also he brought out an interesting section on deduction front where he talked about to say that if you wanted to give a political donations, if no donation in the cash would be given, if at all you need to give any political donation, it has to be other than cash. In terms of the corporate, very interesting thing which we thought would be introduced, but other than investment allowance, where he said that you need to invest more than 100 crores in 2 years. He gave a period of 2 years. The moment you cross that limit, you would be entitled to get an investment allowance deduction to the extent of 15%. We were expecting that maybe the depreciation rate will go up, because since 2005 we have not seen any change in the depreciation rate just on plant and machinery, slated to be 15%. So we did not see anything on that front, and only benefit which he has granted is only restricted to this. In terms of widening the tax base, very interestingly, if you will see, buyback of shares, as you are all aware, that the companies who were having, or who were the cash-rich companies, especially those who were in IT sector, probably they were the one who were using this method of buying back the shares. The companies buying their own shares, and as a result, if you have rotated your investment through Mauritius or through Singapore, depending upon which treaty it is, you would be entitled to get a relief on the long-term capital gains. As a result, without paying any dividend distribution tax, you can repatriate the funds. That was a scheme which was applicable for so long, and he tried to block that by levying an additional tax of 20%. So in a way, the situation is if the company buy back its shares from their shareholders, liable to pay additional tax of 20% on such distributed income. And the difference between the buying price and the issue price of the shares would certainly be, it would be taxed. So as a result, even those who are coming through Mauritius, by introducing, he tried to block that, and it would really have an impact. And he tried to widen the base. Interestingly, on mutual funds, as we all individuals make investment in different schemes, in terms of mutual funds, and what we used to get was, we were getting net of tax. So he had extended or increased the rate from 12.5% to 25%. So as a result, all of you who are making investments either in debt funds or in share equity funds, I think now by increasing this rate of dividend from 12.5 to 25%, it would be advisable to go on the growth scheme under the dividend-oriented scheme, because that would really impact you quite extensively. Then certainly 5% concessional rate has been provided under infrastructure debt fund, especially for the non-residents. I think that's a welcome step, so that more funds would really be sent to India. And I think in this particular sector, the requirement for funds is undoubtedly there. In terms of commodity transactions tax, as you know that STT was already there, and people were apprehending that the CTT may not be introduced. There was a strong lobby that this should not be introduced, and I think he has ignored the same. Although the commodity sector is not doing something great in the last 1.5 years, in spite of that, the commodity transaction tax is being levied on all the commodities derivative transactions, and at the rate of 0.01%. I think that is something new. We are really trying to widen the tax base. One important thing in terms of withholding, if you are buying any property, so tax withholding of 1% of the transfer of immovable property other than agricultural land, where the total income of consideration of such transfer is more than 50 lakhs. If you recall, 2 years back it was introduced, it was highly debated, and after receiving a strong opposition, this section was dropped. But I think again we wanted to focus to say, if any transaction which you are doing more than 50 lakhs, you must withhold the taxes. And in case if the seller is not entitled to pay, he can claim the refund. But he wanted to ensure that any transaction where the registration is done which is more than 50 lakhs, at least taxes should be collected so that the tax authorities should have something on record to examine the particular transaction. So I think that would really have a major impact. So by introducing this, he has really widened the tax base. In terms of individuals, I did share with you what exactly he just wanted to bring in. On the corporate side, as you know, all the promoters companies, when they receive the dividends, because as on date you all know the facts that people who have gone for an outbound investments generated good profits abroad. They don't want to bring the profits back to India, and they wanted to say you have a holding company in the Netherlands, and from there you are making an investment across, and whatever you generate on your overseas investment, you intend to retain all the funds at that level. So last year he introduced to say that there would not be a 30% maximum rate when the dividends are declared by your own overseas companies and the dividends are paid to Indian holding. So he said there would be a flat rate of 15%. Industry made a very strong representation. Why not to reduce this rate? So instead of reducing to 5% or to 10%, this rate of 15% is extended for another 1 year. So in a way, without changing any rate as such, he has extended the period by 1 year. So I think it's good, but it would have been far better had he thought through to reduce the rate. Another important point is that if you know that all the companies have there is a multi-tier structures are there. As far as domestic companies are concerned, there was a cascading effect when you declare the dividends. That was clarified in the last budget. This year he has introduced also on your foreign dividends. So in case if you receive any dividend from your foreign company, you will not see any cascading effect, and the same principle which was initially there in the domestic companies has also been introduced in the foreign companies' dividends. So I think that's a very welcoming step as it was expected. In terms of stamp duty, very interesting thing which he has brought in, the stamp value to be adopted as a consideration for transfer of immovable property held as a stock in trade in case where the actual consideration is less than the stamp duty. That's something which is interesting, and then further he clarified that stamp value as on date of agreement to sell, if any, can be used against the stamp value as on date of the registration of immovable property, provided the consideration otherwise by way of the cash is paid under the agreement to sell. So I think same way he has introduced for individual, and in a similar fashion it was introduced even for the companies who are showing the same as their business assets. So I think that's a very significant thing which he has introduced. In terms of tax residence certificate, and you would have seen the market fell down like anything, because the language, the way the section was introduced, it appears if that, as far as TRS is concerned, is not only a strong document to justify that you are the resident of a respective country under which you are taking a treaty benefit. So what he did was that this is not the sufficient condition to justify that you are resident. That is the way the language was introduced. That really shattered the confidence of all FIIs, and immediately, I think within 48 hours, he clarified it, and the press note was also released by the government to say that we would certainly respect the tax residence certificate which is issued. And as you are aware, especially in the case of Mauritius companies, in Azadi Bachao, this issue was debated in Supreme Court, finally had that you will have to respect. And government at that level also introduced a press note, or there was a circular, that tax residence certificate is a good proof to justify that you are the resident of a respective country. And because of this language, it really shattered, but then it set the things right by issuing a press note. And I think the directions have been already given to the tax authorities that they should respect that instead of really going against the spirit of TRCs. And that would certainly impact all the investments coming either from Mauritius, Singapore, Cyprus, etc. So I think that is very interesting. In terms of royalty and FTS, as you know, at one point of time the tax rate was as high as 30%. Finally, if you see, as per the last year, up to last year, the rate was reduced under the domestic law at a flat rate of 10% tax on the gross receipts. Mostly the double taxation treaties which we have signed, the tax rate is 10 to 15%. But new treaties which India signed lately was restricted only to 10%. Here now he intends to revise the rate upward, and he said it is going to be 25% of all kinds of agreements. Whether agreement is signed way back in 1976, 85, because if you see the current law, based on different dates of agreement, there were the different rates which were applicable. So across, he increased the rate from 10% to 25% under the Income Tax Act. GAR, as we all were very scared of, and certainly that declaration was given that it has been deferred to financial year 15-16. But few things which were expected he introduced, few things he remained silent. If you look at the GAR, one interesting thing he talked about approving a panel, where he said that panel would consist of a chairperson who would be acting or a retired High Court judge. I think that's a very welcome step. Because had there been a panel of all people from tax authorities, I don't think it would have achieved anything, as we found that DRP, dispute resolution panel, which was introduced, and it turns out to be absolutely complete failure. So I think he has clarified that as and when it would be introduced, the panel would constitute a chairperson who would be an acting or retired High Court judge. The first member officer would not be below a rank of Chief Commissioner of Income Tax, and second member would be a scholar having a special knowledge on direct taxes, business accounts, and trade practices. So I think that is what would be the constitution of this, the panel. And it also says that the approving panel will have all the powers equivalent to AAR, as we have an advance ruling. So he has equated through this new amendment. He said they will also enjoy the same, the powers. But as it was expected, that minimum monetary threshold limit when the GAR would be introduced, he has not introduced in this law. So he is completely silent on that. And he confirmed that the treaty would not override the GAR, which is very damaging. So even if you have signed an international tax treaty, GAR would prevail over the treaty. That position, as there was an opposition and even the panel, which also suggested that this should not be a situation, but I think he has not acted upon that. That is really a very serious matter of concern. And it was also expected that grandfathering